All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, December 6th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it here today. So a little bit of an alarm going off here. They closed us below 45.50. So imagine that. That is the first time since the 21st that has happened. Now, again, it's not the end of the world, but it is an important psychological level. They've defended that literally every single day since the 21st, or I should say 22nd there. So we did close below that. It's not like a death sentence. If we look at the spiders here, just 66 million shares here, including the after hours. It's 4:11 p.m. right now. I'm doing this, but we did close below this little short-term trend line here, which you can see on the hourly. So a little bit of technical damage. You can see today we gapped right up into that 459 area. Same area as 45.90 on the SPX that I've marked as a potential point of interest. And you're going to see just really a fade all day. Down move inside bar, down move inside bar, down move inside bar, down move, bear retrace, down move, little consolidation, and then a dump into the end of the day. So this keeps happening, right? Let's use a 10-minute. Fake breakout last Wednesday. Last Friday, that's it. We're going to new highs, right? We're close at the highs of the week. Breakout. Monday, gap down. Tuesday, inside day. Today, that's it. ADP number. We're going to the new highs. And then just a gap and crap all day long. So again, this keeps happening here. And that's kind of, for the bears, that's kind of a good thing. Like you want to see that continue to get rejected. And then you want to see technical damage here, which you've done. That said, you can make a case that this pattern right here is still just up move and then sideways. So at the same time, it's not like a huge victory for bears just yet. Again, I continue to maintain, I'm going to get rid of this for now. I continue to maintain that you got to close below this pivot here, 453.34. On the SPX, it's going to be 45.37, spot 24. You got to close below that. That's kind of the line in the sand here. Now, the triple Qs, guess where they closed this thing today? You can't make this up, and this is why details matter, and I talk about this all the time. Is that an important level? 385.05. You watch these videos, you know that is very important. And you're going to see here, intraday, we hammered on it, bear flag, and then down. So 386.05. This is the close. So we did close below that green bar there on the Qs. So be aware of that. That means, according to technical terms, you have an inside bar pattern here, up move. All of this price action is inside of the power bar on a closing basis. We closed below that today. It also happens to be the bar that broke out of the 52-week highs, and now we're closing below that. So that is a failure. So that, if anything, if there is anything the bears can really hang their hat on today, again, not a lot of volume. Spiders technically still going sideways. That's what you have to hang your hat on here. So I think technology is weak. I think it remains weak, like I've told you, until OPEX. So this could be a potential failed pattern, and usually when that happens, it means I'm moving in the opposite direction. So first step would be gap fill at 377.21, and then the next level is 370. So I think I'm going to give the Qs a little bit of a downside bias here. We also saw some weakness out of the semiconductors today, down 81 basis points. A little bit of a lower high there. And the SOX, I think, is a lot weaker right into this gap fill area, or gap window area, rather. Again, gap and crap, lower highs there. If we break below that, 3,600, 3,550, and 35 are going to be your near-term targets. Another thing, too, that I want to talk about is going into tomorrow. So we have jobless claims, and then obviously NFP on Friday. There's a lot of convergences going on here. So the fact that bears did a little technical damage here is a win for them. Another win is that you take a look at the 30-year, pivot to, August 22, and then March, April, summer, June, July, and we're right into that now. Also, your 200 MA right below that, pivot low, right across. 10-year going all the way back to 2022, actually 2021 rather, December. So we're coming at a 2-year long trend line here. Pivot in March, or excuse me, May, and right down into it. We're oversold going into that. Pivot high, pivot low, 200 MA. So again, let's say the jobless number is priced in and non-farm payroll is priced in. We inch down, maybe off of the reaction. We could get a counter trend bid here in yields. That could set up the market for a sell the news. Why do I say that? Well, we should have rallied today on the ADP number, right? We should have rallied last Friday. We should have rallied last Wednesday when we gapped up into all these levels, right? On the spiders, we had the gap and crap last Monday. We had the power surge on Friday. We had the gap and crap today. Where's the follow through, right? So it does seem to me like the market's it knows what the data is. It's kind of priced in. You could make a case that, hell, you can make a case this entire move was just pricing in that data. So just be aware of that, but take a look. So I think we're down into this area tomorrow and Friday. I think I favor a bounce here in yields, especially considering we're going into the FOMC next week. So a lot of, convergences coming into play here. And just be aware of that. Another thing that I find interesting, we'll talk about crude in a second, but we're getting into that level there on crude as well. And that happens to kind of coincide with the same level on yields. And we know that they trade positively, with a mostly positive correlation lately. So just some things to keep an eye on there in the markets. But again, we're not gonna condemn the market just yet here, but definitely a good little dump here. And it's notable that we keep gapping up and being unable to hold the gains here. So at the very least, I think the market needs to consolidate more if it's going to go higher. I don't think it's ready to break out yet. At worst, we need to pull back. First target would be 4,500. If you get through that, you got the gap window there and then gap fill at 44. Again, watch the Qs here. I think they're kind of leading the market with that weakness there that they showed today with that failure of the inside bar. Russell 2000 did actually make a new high intraday today. Didn't quite get up to the target. I still think this can go higher. You got a lot of support at 182. Again, no problems with a pullback here. It was at 161, a month and 5 weeks ago. So a pullback is fine. I would say you don't really need to get concerned until you break 182 or 180. But right now, a pullback here is not problematic whatsoever for the Russell 2000. I think it's still fine right now. The Dow here made a new intraday high as well. This is parabolic. Just be aware of that. Parabolic moves tend to end in the same way that they went up. So just be, on guard for that. And we are coming into, we're not far away from double top here on the DIA either. First pullback target would be 355, and then through that, right around that 350 area. We talked about the semis a little bit already. IGV, careful, there's an island there. So if we gap down, it's going to leave buyers trapped. And again, as I showed you yesterday, there we go. There's your 7.5 fib. We hit that. So at the very least, I think IGV needs some weekly consolidation. It's had a really nice run here, but just extended and needs to pull back a little bit. Transports here also pulling back in, down 39 basis points. Watch this trend line here. If we close below that, that's a failed inverse head and shoulders. Again, a failure doesn't mean it has to crash. It just means that we're no longer relying on that pattern. But for right now, 15.6 is still resistance. We've had a nice run off the lows, and again, some consolidation, some backing and filling. There's really nothing wrong when you see that, but transports were down again on the day. We talked about rates already. I'll just quickly cover the 2-year. So that was sideways inside bar action. Same thing with the 5. It's interesting right now because the market is pricing in a slowdown, right? But look at the yield curves. 210 back inverted by another 0.5%. 3-month 10-year. This is about to make, if this goes any lower, it's going to be getting close to the lows. But we're pricing in a slowdown apparently. But this is, going the wrong direction, right? So just something to keep an eye on there. It's bond market's way of calling BS sometimes. Anyways, XHB, new all-time highs today, new all-time closing high as well. And we did pull back in off the highs though. So a little bit of a tail candle there. Would prefer to see more volume to confidently call some type of a top. But XHB did make new highs. And again, it is very extended and overbought, but definitely respect it here. This market has a lot of strength in it. It's a little extended. We'll see if it can pull back. If it can't hold 85, that would be a possible little failed breakout. And then we look back to around 83 here, and again 81, and so on and so forth. But XHB still up 1.25. VNQ pulling back here again, like a lot of other things, up from 70 to 84 in 5 weeks. It needs to pull back. We talked about this resistance zone, and it is getting a little bit of a fade off of that. Again, this can come back down to 80, 25, 80 bucks, 81, and still be fine. But again, just a little stretched here in the short term. XLF pulling back nicely. We talked about this pivot and this resistance zone. We do expect that to continue to come down. 35 bucks will be your first area. Take a look at KRE. That tried to rip higher again. Look at this pop in the morning. Same thing as the Russell, and then fading really all day long after that. Still finished up 2 pennies, but again, into a pretty good zone there. So I think these financials do need to come back to earth a little bit. KBE, big up move, and then finished inside of Monday's action. So again, we'll watch 40.75, maybe 40 bucks there if that pulls back, or it could just consolidate. But again, financials definitely a little overbought here. Need to pull back. Look at the XBD here. Again, up 35 bips, big thrust, and then all the way back in. But right into that 510 handle, overshot it. I still think it wants to get to 522. That would complete this inverse head and shoulders pattern. All right, on the commodities here, so crude, another dump here. I think this is into a buy zone. I think it can go a little bit lower though. So usually when you get a big thrust like that, you get some type of a panic move after that. But it is getting very attractive down here for a swing long. I'd love to see it hit around 68 or so tomorrow, but this is getting these pivots here, this reversal. I like the area there on crude, and as I said, I think it lines up very nicely with those same levels on yields there. XLE, leave this one alone though. I do not like the pattern. Bearish inside bar on the weekly, and it's starting to play down. Could it hold up on the 100 moving average? It could, but probabilities just aren't good enough for me. I would like to get this much cheaper myself. XOP, again, if we had gotten down, I know I've been talking about this level for like weeks now, but yeah, I've been talking about it for weeks, and we've been going sideways, which I don't like. So we got a bear base here, down move, inside bar, 1, 2, 3, and then a thrust. I would have liked it a lot better, like I said yesterday, if we just did this, into it instead of all this chop stuff. So it's building up energy when it's doing that, and it's thrusting lower. So it's kind of 50-50 as much as it can hold it, as far as if it can hold this level or not to me. And I don't really play those odds. So OIH, nice breakdown there. So possible little, that falling wedge pattern may be failing, but the monthly is still fine. I think as long as it's above 280 on a monthly close, OIH is fine. I would be interested in that potentially at 280 if we could get down there. CCJ also pulling back in today, down 1.82. No real problems there. That is still holding on. Trend is up. It's parabolic on the monthly, so just be aware of that. URNM rolling over as well. I still think that can get to double top. Doesn't mean it has to, but again, pattern-wise, it is fine there. Nat gas here taking a huge dump, down over 5% through that 200 moving average on volume. Take a look at the volume intraday. There wasn't really any news, but big dump there in the middle of the day. Coming into a lot of these pivots here. We'll see what they do tomorrow. I'm not sure if there was maybe some fund blew up or something, because again, there was no news, but it had a really big, it was trading like flat before that happened. And it took a huge dump. We have inventories tomorrow. Maybe somebody just wanted to whack it down before then. Interested to see how this reacts around 245, 250. It may want to get down there tomorrow. But nat gas, big dump there today, and now just through that 200-day moving average. All right, dollar index here. Where is our dollar chart? There we go. So dollar, again, it's going to get to 104.35, maybe 104.50. And again, the market's been able to ignore this. I mean, dollar's up 1, 2, 3, 4, 5 out of the last 6 days. Market's been able to ignore this, I think, just because the yield is down. But I do think the dollar wants to get up there. If we get through that, again, I've told you 105, that's going to be the next level. And we'll wait and see if that happens. Again, there's a little resistance here. So it may need to pull back or do some backing and filling. But ultimately, I think it wants to go down to this blue trend line. They're down near the 101.50, 102 area. But dollar index little bit of a retrace, and again, it's bouncing off that 618 that we laid out for you last week. Gold here, kind of a nothing burger, up just $7. There's nothing to do with it right here. I think it can come down and fill the gap, possibly even get to 200. I like it a little bit better at 1950. Pretty good reversal on volume. Respect it. Okay, don't try to front run this. Just let it work itself out here. There was a lot of volume. Somebody wanted this lower, so don't try to fight those people that have, I don't know, 368,000 futures contracts. So don't try to fight those guys. Let this thing pull back in, and we'll see if we can get a better pattern, and can potentially produce a better entry. Silver here, that should get to 24 tomorrow. That actually gets interesting there on a pierce of the 20 moving average for a quick pop, potentially. But after that, you got 23.50, and then really down into the 23, 22.50 area there. We don't need this trend line anymore. But that's near-term levels there on silver. And again, try to get above that on the weekly. It did, and then kind of a failed breakout there. So just be careful with silver here. I do think dips can be bought, but you got to be selective here because it's a volatile commodity. Platinum, that's palladium. Well, palladium piercing double bottom here. Next level, I could just say it's just 900 for that right now. Platinum also pulling in, also very attractive down here. I do like platinum myself. And I am looking for a buy entry. That copper also got roasted today. Nobody's talking about copper. Everybody wants to talk about gold and silver, but copper equally is vicious of a reversal. Same setup as silver, above the weekly trend line, and then a complete rejection. So again, even as we closed above here on Friday, I told you guys on here, I was like, I think this still can go lower. I'm not going to fight the chart, but I still think it can go lower. And we did do that. Next level, I'm just going to say 370. It's kind of the next level there on copper. I don't even know if I like this trend line that much anymore. But we'll see. Maybe it can be a little bit of support tomorrow on copper futures. So, all right. Lastly, Bitcoin here, still chugging higher. So it's just kind of hanging in there. A little inside day going on. ETH, same thing. I still think ETH can get to 24. And Bitcoin got to 44. Maybe again, there's your big pivot, right? So if we look on a weekly, there's your big pivot, down move, bear flag, retrace. So that's where the sellers should be sitting if we can get up there. But yeah, no real problems with Bitcoin other than the fact that it's really overbought here on really all time frames. But again, that's why I said a while back, if you close above this red bar, it's going to turn bullish again. And you can see how that works there. But yeah, Bitcoin hanging in there okay, and we'll just leave it there for now. So again, 48,000 be kind of your max move here. All right, and again, lastly, let's get over to the spiders really quick, or SPX. So close below 45.50. So again, sound the alarms, call the market police. We're back below that trend line as well. But you need to close below 45.37 to really open the door for 4,500. But my big concern right now is that big tech lost that level there on the QQQ, and that makes up the largest part of the market. So that is a failure. So just be aware of that moving forward here. But again, we have jobless claims and we have non-farm payrolls coming up on Friday as well. And then, of course, the FOMC next week. So that sure should be a lot of fun. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com and talk to you guys all tomorrow.